Hi, this is Ripe Trade, and I wanted to talk a little bit about the systems to show some clarity on how to actually trade them. As you know, we've got computer-generated strategies that tell us when to buy and sell and what to buy and sell. And every night I get what's called an order report. This is just an example right here. This is an example of an order report, and it tells me what to do, the exact entry and exit criterias. I take that information and I put it into an email. This is for the subscribers. I put it into an email and also a new website to relay this information. And I'll just walk through all the systems real quick and talk about how I actually trade them. The intermediate term S&P model is now in cash. This is for March 16th. This model will get long at the close tomorrow, March 16th, if the VIX high stays below 2572. So how do you trade that? The first thing I do is on the next day, which would be you get the email the night before, March 15th. The next day on March 16th, you place a market on close order. This enters the trade at the close, at the 4:15 close. All right, and so you enter a market on close order. You could always cancel that order, all right, up until 4:15. So the next step is then you have to then follow the VIX high and make sure the criteria is met of it staying below 2572. If that criteria is met throughout the day, you leave the order there. You let it get executed on the close. If any point during the day that criteria is broken and the VIX breaks that high of 2572, you can the order. All right. Right here is a link to VIX quotes. Takes you directly to the CBOE. You can get live VIX quotes if you don't have a trading platform that gives that to you. But you can see right here, you get the VIX quote, and this is showing you the high of the day. Right now is 2105. Today is not March 16th, but I'm just using this as an example. So right now, the high of the day, 2105, is below that entry criteria. If it's for a short, it'll be the low being above a specific criteria. All right. So for the S&P, the intermediate term S&P model, the NASDAQ model, and the VIX model, all those models enter at the close, and I trade all those the same way. I enter the order, mark it on close, and simply cancel the order if any point during the day that criteria is broken. All right. Now for the Ripe Trade and Sharp Idea setups, you always get an image that you can click on and enlarge. It shows you the specific entry prices. All right. Entry prices here, the specific limits that are to be entered at. And then right here are the rules. Enter 4% limit below the prior close. All right. And then this hyperlink will take you directly into a quote board that'll show you, it's 4% below the prior day's close, so you take a look at this column. If you see stocks that are more than 4% down, those are buys, all right? Right now there's a big list of stocks, so that's the only way to really do it is just to watch those stocks and trade when you see it happen. If there's a small list of stocks, you can enter actual limit orders and just enter the limit orders and see what if anything hits during the day. Okay, shorts, the longs and shorts are the same thing. The shorts are entered 10% above the prior day's close. Here are your exit rules. The long exit, long at the close on the day when a 2-day RSI closes greater than 50, or exit on the first profitable open with a 1-day delay. So what the heck does that mean? This is what that means right here. Okay, so now that you're in the trade, we're going to talk about how to get out of the trade. Again, the exit rule is a 2-day RSI closing above 50. So you need to have a chart with an RSI indicator on it. Right now, this default RSI is set to 7. So you got to change that to a 2, all right? So any close that this 2-day RSI gets above 50, okay, there, I just went and put this horizontal line in here at 50, so it's a little easier to see. So if the close is above 50, you'd sell at the close. All right. Otherwise, the exit is on the first profitable open with a 1-day delay. You could see you got in here and then exited here because the 2-day RSI closed above 50. If it did not exit there, it would be the first profitable open with a 1-day delay. All right, this is the first profitable open. A 1-day delay means you have to stay in the trade for at least 1 day. So it didn't get out here at the first profitable open because there's a 1-day delay criteria. So you need to, if this two period RSI didn't get you out of the trade, you'd get out right here at the 1-day delayed first profitable open. Okay, hopefully that's clear. The short exit rules are the same idea. You exit the 2-day RSI is greater than 70, or the exit on the first profitable open with a 1-day delay. All right, simple enough, I hope. The long-term trades, the growth versus value strategy is simply this. You know, the model right now is long. The only time you're going to make a switch is when you get a short signal, and when that happens, that rule will be at the top of the email or the page to let you know that model is going to make a trade for the next day. And when that happens, you just enter at the open. All right. So instead of so you're currently long the IWO, you would if a trade happens, you're going to short the IWO at the open. You're going to sell your long position and short a new position, or vice versa. And then the long-term asset allocation models are real simple. You buy these 5 asset classes when they're in uptrends, and you sell off a portion or all of them when they get into downtrends. You can be anywhere from 100% invested to right now it's only 80% invested. I hope this makes sense, and I explained enough to clear up some of the questions that some of you have had. But that's it. You know, it's nothing that's too hard for anybody to do. And like I said, you can give the service a try. There's always a money-back guarantee. This is Ripe Trade once again. If you have any questions, please drop me an email.